Folks, what has just transpired over the past few hours is going to change how stocks are valued, the market in general, how it's valued, crypto pricing, real estate, the Fed funds rate, treasuries, and every other thing in the economy, just based upon what has just transpired in the past few hours here. It is an absolutely unbelievable move. I'm going to take you through what has just transpired here. What is going to happen now to the stock market, to valuations, to everything across the board? I'm going to take you through that. What does this change with the Fed's trajectory in terms of raising rates? It changes everything. A line in the sand has been drawn unbelievably early in this situation. And to be quite frank, knowing the Fed's history, I guess it shouldn't come as a surprise. I hope everybody enjoys today's video. Thanks for being subscribed. Got a lot to take you through here, okay? U.S. government steps in and says people with funds deposited at Silicon Valley Bank, SVB Bank, will be able to access their money. Banking regulators devised a plan Sunday to backstop depositors with money at Silicon Valley Bank, a critical step in stemming a feared systemic panic brought on by the collapse of the tech-focused institution. Depositors at both the failed SVB and Signature Bank in New York, which was shuttered Sunday over similar systemic contagion fears, will have full access to their deposits as part of the multiple moves that officials approved over the weekend. Signature had been a popular funding source for cryptocurrency companies. Those with money at the bank will have full access starting Monday before the market opens. The Treasury Department designed both SVB and Signature, or designated both SVB and Signature as systemic risks, giving it authority to unwind both institutions in a way that it said fully protects all depositors. So they basically said, even though no one knew about these banks ever, pretty much 99% of the population never heard of these banks before of literally 48 hours ago, or 72 hours ago, I should say, right? 99% of the population had no clue what these were, right? And now, suddenly, these are so important that we need to basically, fund this whole situation, right? Pretty incredible how fast that happens, right? The FDIC's deposit insurance fund will be used to cover depositors, many of whom were uninsured due to the $250,000 cap on guaranteed deposits. So basically, the best way I can put this to everybody watching this is they're bailing out rich people. That's the best way I could put it. I mean, let's be honest. If you got, more than $250,000 with a bank, that you're rich. That's the bottom way to put that. You're rich. And a lot of people had millions of dollars. Some had tens of millions of dollars. Some had a lot more money than that with this particular institution, and it's all going to be guaranteed. Some companies had tens of millions. Some had hundreds of millions of dollars, right? Yeah, when you're talking about those sorts of monies, I mean, I think it was something like, over 97% of either people or companies that had money with Silicon Valley Bank had basically amounts of money that were more than $250,000. Woo-wee! Along with that move, the Federal Reserve also said it's creating a new bank term funding program, BTFP, aimed at safeguarding institutions affected by the market instability of SVB failure. Wow. The Fed and the government just pulled the biggest maneuver here that I've seen them pull in such a quick amount of time, because we're talking about a situation here that this isn't nearly as serious at this point in time, not nearly as serious as a great financial crisis, not nearly as serious as Rona, when basically the government shut down the economy, right? And here we are, the Fed's getting in such a position now where they feel like, 99% of people don't even know what these are, but we're going to backstop these. Holy smokers, that's no jokers. A joint statement from the various regulators involved said there would be no bailouts and no taxpayer costs associated with any of the new plans. Shareholders and some unsecured creditors will not be protected and will lose all of their investments. That's interesting. That's what we call special rules for whoever we want to make special rules for, right? The rule was FDIC didn't have your back if you had over $250,000, right? But being that the government wants to change the rules whenever they want, they said, you know what? If you got $10 million with SVB Bank, we got you back, okay? But if you invested $5,000 of your money into SVB Bank stock, we don't have your bank back, okay? So we're gonna make up the rules as the game goes along. We're just gonna choose who are the winners and who are the losers of the game as the game goes along, right? And it's kind of a frustrating situation because it's like, how do you know what the rules of the game are when they just keep changing them as we go along here? And it's like, but you're not getting bailed out. So grandma who put $5,000 in SVB Bank stock because she thought it was a safe investment, because after all, I mean, SVB was just featured as, guess what? Forbes 2023 list of America's best banks. It was just featured as Forbes America's best banks. Isn't that incredible, right? Moody's had an A rating on the bank. So grandma, who put $5,000 in SVB stock, she loses all her investment, even though she only has a net worth of, $100,000. But yet the tech founder, who's worth $700 million and had $10 million with SVB Bank, he gets all his money back. That's what we call making up special rules for whatever people we want to make up special rules for as we go along. And you wonder, in the government sometimes, they wonder why people get frustrated. They wonder why people get mad. It's because the government just, picks the winners and losers. And they say, you all over here, you're going to be the losers, but these people are the winners, right? And yet, they won't bail out other things, right? I mean, there was a lot of us that had money in different other companies, right? Voyager, where's our bailout? Oh, we don't get a bailout. We're not important enough, right? Oh, that's because it's this. They always make up an excuse. Oh, you don't get a bailout over here, but these people over here get a bailout. There's always an excuse. They make up the rules as they want to go. We'll save this one, but we'll let this out. They did the same exact thing, by the way, in the Great Financial Crisis. There's some institutions the government let fail, while other institutions got saved and got bailed out. And it's like, wait, why did this one have to fail and then this one over here get saved? Isn't that interesting, right? It's what we call picking the winners and losers. And ultimately, it's of huge frustration of the American public because they see this go on. The rules aren't clear of this game. And then the government comes in and they help whoever they want to help out. And other people are left standing there saying, where's my help? I lost money in this, or this didn't work out for me. How come I didn't get help, but then these people over here get help? If anything, they don't need help, right? So Roku had $487 million with the bank. That's $487 million, right? That was only 26% of their cash. But yet some person who, owned the stock or did this or that, who has a net worth of $10,000, they don't get helped. Isn't that interesting? It's what we call picking the winners and losers. And it's very frustrating when they just change the rules like that, right? And they say, oh, you know what? This wasn't the rule, but we're going to change it for these people, but we're not going to change it for these. It causes a lot of frustration, right? Look what's happening, okay? Now we got to talk about the financial components of this because it's massive, okay? Bitcoin is skyrocketing off of this news with one of the strongest moves I've seen in quite some time with Bitcoin, almost 10%. Ethereum, same exact thing. The crypto market gets the hint from the Fed and says, oh, I get what you folks are saying here, okay? Look at this. It was a shocking situation with USDC, right, where it basically got completely unpegged from the dollar, right, and it fell all the way to 87, 88 cents at the lows. And basically now at this point in time, it's almost completely repegged with the dollar. That's incredible. Incredible because I don't believe this has ever happened in the history of crypto, from my understanding, where you've had a stable coin basically get completely unpegged from a dollar and then get back there. It's incredible move there, okay? This is a Fed drawing a line in the sand, okay? And this is going to matter for the market, and we'll talk about what stocks it's going to matter for the most and how it's going to affect the market and things like that. But let's be very clear. The Federal Reserve, the Fed, they just drew a line in the sand, okay? They drew a line in the sand that basically says, we're scared as crap, and at any hint of potential, let's call it non-stability of the financial system, we're going to be there to save the day. And it doesn't matter if inflation high. It doesn't matter what's going on. If we get even a little bit scared, right? With this SVB bank, it was a little scary, but let's be clear about this. Was this necessarily like this wasn't like it was a JP Morgan Chase going under. This wasn't like it was Bank of America or Wells Fargo or something like that, right? So the 16th largest bank goes under there, right? Which could be debated if that was even really a bank, because they had a lot of different businesses in a lot of different ways, right? That goes under, and as soon as that happens, the Fed is like, we're scared as crap. We're drawing a line in the sand right here. We're saving the day. Whatever happens here, okay? There's a big line that was just drawn in the sand, okay? Because now, any fears about any more bank runs, anything else happening in the banking system that could take down the economy, done immediately. Anybody that had a bunch of put options on the regional banks, get ready for the regional banks to skyrocket. Any of the banks in general, boom, okay? Because now the Fed is clear as day, like they're ready to save the day at any sight of some potential scariness, okay? I wouldn't have been very surprised if the Fed would have stepped in even earlier, if this had played out a little longer, but with how fast the news kind of traveled and how fast it took down SVB, they didn't really even have time to react. They probably would have stepped in if they had time, but they didn't have enough time, so they had to go ahead and do it here, okay? Woo, man, that is a big, big line in the sand that's been drawn, and we've never seen it where the Fed has drawn a line in the sand this early. This is really early for them to do this in a whole situation like this, right? Fed funds rate. They got maybe one more time raising, and I think that's about it when it comes to this, okay? Anybody who was thinking they were going to raise, 2, 3, 4, 5, 6 more times, I can tell you now at this point in time, this completely changes the Fed's game across the board. Even if they try to talk tough, baloney, okay? They're a chihuahua. This just proved that Jerome Powell in the Fed is a chihuahua in this situation. They're all bark and they're no bite, okay? This proved it. This was like the little test of like seeing like how strong is the Fed really? How much are they really about this life? And they just caved like it was nobody's business, man. They caved like it was nobody's business and were like, yeah, we're going to backstop this, baby. We're going to do whatever it takes. All depositors, I don't care if you got 50 million with them. We got you back, okay? 100 million, we got you back. 500 million, we got you back. We don't care, okay? We're going to backstop this one because we're scared of systemic problems, of systemic risk, right? And it just goes to show you. And I told people this over and over and over again in videos for months now, right? As soon as there's any problems out there, the Fed is going to cave and they're going to switch so quick you don't even believe it, okay? This is how they play this game, believe me. As soon as they get worried, as soon as unemployment ticks up in any way, believe me, boom, cut, okay? So now at this point in time, if you thought they were just going to keep raising rates, all bark, no bite in this situation, okay? That's all I'm going to say about that. They'll maybe raise one more time because they've got to stick with that raise. But I'm just telling you, like, the chances of them raising many more times this year just went to probably less than 10% now at this point in time, regardless of what CPI comes in over the next few months, which I think CPI is going to come in, let's call it much, much better over the next few months. But regardless now at this point in time, they just showed that, oh gosh, they broke something, right? And there's an old saying when it comes to Fed, they're going to raise until they break something. They just broke something. And what happened as soon as they broke that thing? They're like trying to save it right away. Isn't that incredible, man? We're going to come in and save the day, right? Now, also, do not be surprised if as soon as we get under 3 for CPI, they start cutting rates. And I mean as soon as we get under 3. They'll use whatever reason they got to use at this point in time. No different than they just used whatever reason they got to use for this SVB. Oh, we're scared about systemic problems and systemic risk and, an effect that could affect other regional banks and other banks in general. So you know what? We're going to come in and we're going to save the day, right? So as soon as the CPI gets under 3, baby, they're cutting. They'll use whatever excuse. Oh, unemployment came in a little higher than expected. Oh, it was 3.7% instead of 3.6 cut. Believe me, man, they'll use any reason to cut as soon as we get that CPI under 3. Any reason, okay? It'll happen quickly. Now, in regards to stocks, right? And if you're looking at like big tech stocks and whatnot, don't be surprised if over the next, I would say several weeks, if not several months, the more growth names outperform significantly the value names in the market now at this point in time, right? Now that the Fed's been shown to just, they're a chihuahua in this situation, don't be surprised at all, right? Wall Street's going to try to make it not look too obvious. They're going to try not to rocket these stocks too quickly, but just watch the move over time here, essentially, right? And don't be surprised at all if growth way overdoes value, right? Now, this is from our report we put out to the investor group every single week, right? The private wealth group, private stock group, which, by the way, if you're looking to apply for that, that's in the description area. We put out this comprehensive report every single Friday for all the members in there, right? And just one of many, many things we cover in there is kind of the fear and greed index, right? And what we saw was this week, obviously, extreme fear in the market, right? And we saw people loading up on put options, especially over the past few days. Why were people loading up on the put options? Well, because this whole SVB put a lot of fear into the market, right? Everybody started thinking, oh man, I could become a millionaire off put options because this whole baby's going down, right? SVB's going down. It's going to lead to more regional bank problems. It's going to lead to panic in the market, right? But the thing people didn't calculate for when they're running to all those conclusions was the Federal Reserve is a chihuahua, and they're going to be there to save the day like they always are. And they're going to do whatever it takes, and they're going to have to throw whatever they got to throw at the market, and they're going to say, oh, this is bailed out, this is bailed out. For whatever reason, that's the thing people didn't calculate for. And, you know, it's a hard bet to bet against the Fed when they've proven time and time again. Look what happened in 2018. And I understand there's some people watching this video that didn't care about stocks, didn't care about the market in 2018, okay? I'll tell you what happened in 2018. The Fed started raising interest rates, okay? Donald Trump, the president of the United States at that time, said, boy, you better stop raising those rates. And Jerome Powell said, yes, sir. And guess what? They stopped raising those rates as soon as 2019 came along, okay? That's all it took. That's all it took. It doesn't take much, okay? Look what happened in 2020, right? You know, look what happened right now. So now at this point in time, you know, people are going to lose a fortune on put options because, I mean, I'm telling you, people loaded up on these put options. They had to pay big premiums for them because everybody's convinced the market's done. We're going to have a big crash now, right? And look what happened. Look what happened, right? It's just like, you know, people are going to blow up their accounts again and again and again trying to play a game against the Fed that's rigged against them, man. As soon as you get any actual fear in the market, which we actually had some real fear Thursday, Friday, right? As soon as you start getting any real fear in the market, boom, there's the Fed right in your face and says, bye-bye put options. Have fun losing all your money on those things, right? The last time I really talked about this, and I talked about the Fed has unlimited ammo on their side, right, was in March of 2020. And I remember, I think I even recorded like an audio message for the private stock group at that time, and I released that in the breadcrumbs tab, if I recall. And I was basically, I think I was driving at the time too, and I was talking about how essentially the Fed has unlimited ammo on their side, and, you know, the bears are going to end up getting screwed in this situation because, you know, the Fed's going to basically pull out their arsenal and, you know, save the market. And sure enough, that's exactly what they did. It happened around mid-March of that year, mid to late March, and the Fed completely saved the day, right? And they said, we're gonna backstop everything, we're gonna save everything, which is a very similar move to what they just did here, which is basically them saying we're gonna backstop everything. But the interesting thing is here with the Fed now at this point in time, the Fed and their trigger finger is getting itchier, okay? And it's getting faster and faster. At least in this situation, you had to have the stock market get racked, okay? We got really just hammered. It was one of the fastest stock market crashes. But at least you had that happen before the Fed really stepped in, right? But the Fed, I'm telling you, they're getting an itchy trigger finger at the sight of anything now. They're ready to hop in. What do we need to do? Cut rates? We need to, you know, pump money over here. We need to keep the, you know, credit facilities going. What do we need to do? What do we need to do? They're getting faster and faster at this, which is going to make it harder and harder and harder to get substantial stock market crashes. The stock market crashes of you know, S&P going down 50+%. I'm just telling you now at this point in time, it's going to get harder and harder as time goes along now at this point in time because the Fed is just at the sight of any weakness. They're like, what do we need to do? We'll come save the day. Oh, S&P's down 15%. Okay, that's enough. We're there. Okay. And like I said, they'll always use a different reason to backstop things or to pump money, quantitative easing, cutting rates, whatever they need to do. And they'll find new tricks and tactics as time goes along here. Okay. But it is getting interesting that the Fed's getting quicker and quicker with how fast they pull in this situation, right? And this is why I never stop buying. I take advantage of any dip in the market I get, right? I was out there buying stocks on Friday. There weren't a lot of people that were like me on Friday, I can tell you that much, that were out buying stocks. I bought stocks in the public account. I bought stocks in the dividend account. I bought stocks in the Patreon portfolio, which, by the way, if you're looking to join the Patreon portfolio, that would be linked in the description down there. Might also be a pinned comment. Buying stocks across the board because at the end of the day, we're playing a rigged game. And you have to take advantage of any assets when you get those assets for cheap. And there's a lot of assets that are trading very cheap right now, and you have to take advantage of those. And if you don't, you're just in a denial phase of basically trying to fight the Fed. Because the Fed is basically out here saying, we're going to backstop everything. We're not going to let any super big market crash happen. At the hint of any unemployment going up, we'll be there to save the day. We'll start cutting rates. At the hint of any CPI start coming in really, really nice, we'll stop raising rates. We'll start even potentially cutting rates. They're going to do whatever it takes. And you just got to understand you're playing a rigged game that's for the upside. And trying to play against that game on the other side is a difficult thing. The one thing you've got to be scared of is trying to play anything that goes against their game. So that could be things like, crypto brokerages. Obviously, I got screwed with, Voyager, but I try to play against their game. If we think about crypto, when we think about crypto brokerages, let's be honest, I don't think the Fed really likes those. I don't think the big banks really like those. I think they want to see those fail. I think they wanted to see FTX fail. I think they want to see Voyager, Celsius, all of them go down. I think they want to see Binance go down. I think they're going to try to end Binance. That's my personal opinion before it's all said and done. They don't want any competition. They like the way the game's run through the big banks, the biggest of the big banks, and they like the Fed just having its market pulse. And it's like, oh, a little too much damage, boom. We don't want systemic problems out there. And that, you just got to understand, you can get mad at it, you can get frustrated by it, or you can make money from it. What do you want to do? Do you know what I mean? Like, what do you want to do? Be mad, frustrated, or do you want to make money from it? I'd rather make money from it. That's all I'll say about that, man. I'd rather make money from it because, at the end of the day, they're going to do whatever they got to do to save the whole show, and it goes on. And, you've got to take advantage of these opportunities in the market. You can continue, there's a lot of people that love to just watch like what I call fear porn content on YouTube, essentially, which is just content that's constantly about the world's going to end and, oh my gosh, all these banks are going to fail and this is going to happen. And what they don't calculate is the Fed would never let that happen. And the site of anything, 16th biggest bank that no one had heard of prior to like 72 hours ago. Boom, bailing it out. All depositors, you get your money back. They're going to do whatever it takes, man. They'll do whatever it takes. And you can keep trying to bet against them, but you will just keep losing again and again and again and again and again and again for all of eternity until something really wrecks the whole system there. But I appreciate everybody joining me as always. Thanks so much, folks. Make sure you join us on the Patreon and get to see all the moves I'm making. If you're looking to join my private stock group, private wealth group, looking to build out your portfolios and scale them up, check out the description area as well. That'll be to apply down there. Appreciate y'all. Wasn't planning on making a Sunday night video, but you know what? This is pretty epic. Have a great day.